Great, thank you. So good afternoon, good evening, or good morning. A warm welcome also from my side. Thanks for joining us for this webinar with the Hong Kong Monetary Authority on digital green bonds and the Bond Data Taxonomy. My name is Gabriel Carlsen, Senior Director at ICMA, and I'm delighted to be joined today by Georgina Locke, Head of Market Development at HKMA, Jay Disley, Manager within Market Development at HKMA, and my colleague Emma Thomas, Associate Director in our team. And it's great to see so many participants online today for this webinar. In today's webinar, we will start with a brief introduction, followed by a presentation on Hong Kong's bond tokenization journey and key features of the third digital green bond issuance in November last year. This is the largest digital bond issuance to date. For the avoidance of doubt, by digital here, we mean DLT-based or tokenized. We will then discuss Hong Kong's vision from an innovation and market development perspective, novel features of the issuance, the role of standards, HKMA's approach to implementing the Bond Data Taxonomy, and the direction of travel. There will be a Q&A session at the end. And as a reminder, you can submit questions via the Q&A function here on the platform. So with that, I'm pleased to hand over to Georgina Locke.
Thanks, Gabriel, and thanks a lot for the invitation for us to share our experience in terms of our what we call our bond tokenization journey and some of the new key features of our latest third digital green bond issuance back in November 2025. So let me pass on. I have here today my colleague Jay Disley, also from the Market Development Division, and let me pass to her to make a quick presentation to set the scene to talk about some of the the steps we went through in our bond tokenization journey, and also some of the key features of our latest issuance. Over to you, Jadis.
Yeah. Thanks, Georgina and Gabriel. So yeah, before we go into a more detailed discussion of the bond data taxonomy and our most recent tokenized bond issuance, let me first give an overview of our HKMA's bond tokenization journey so as to provide a bit of context for our later discussion. So yeah, as our journey started in 2021 when we collaborated with the Bank for International Settlements Innovation Hub on Project Genesis. And the motivation behind this project was to test and explore applying blockchain technology throughout the bond life cycle. We explored a wide range of concepts in Project Genesis, focusing on how technology could potentially enhance market efficiency and transparency, including investors' access to information. Having concept tested the idea of tokenized bond, we assisted the Hong Kong SAR government to issue the world's first tokenized government green bond in 2023, bringing the concept to a real market transaction. And we started with a relatively small issuance size of around $100 million. And the main purpose of this issuance was twofold. First, it's to demonstrate that Hong Kong's legal and regulatory environment is flexible and conducive for this innovative form of bond issuance. And second, it's to test out the completion of various bond lifecycle events on chain, from primary issuance to secondary trading settlements, coupon payments, and maturity redemption. In this issuance, we were also able to shorten the settlement cycle from the typical T+5 to T+1, demonstrating the potential efficiency gains brought by tokenization. And we continued to push boundaries and break new grounds in our second tokenized issuance in February 2024. And this time we managed to issue in a larger scale with an aggregate size amounted to around $750 million, which is much closer to the size of the green bonds, and the issuance attracted a wide spectrum of global institutional investors, ranging from asset managers to banks, insurance companies, private banks, and some of the non-financial institutions. We issued in 4 major currencies, namely the Hong Kong dollar, renminbi, US dollar, and euro, making it the very first multi-currency digital bond in the world. In addition, we also streamlined the issuance process by issuing in a digitally native format, removing the need to first issue the bond in a traditional central securities deposit, and then subsequently converting the bond into digital format. Another highlight of our second issuance is that we incorporated standardization by incorporating the ICMA's Bond Data Taxonomy, making it the first issuance by a SSA issuer and the first green bond to adopt the BDT. And please turn to the next slide. Yep, and then we executed our third tokenized issuance in November 2025. And while we retained the key innovative features of our previous issuance, such as issuing in a digitally native format and the adoption of BDT, we also introduced some new features and achieved breakthroughs in multiple areas, which we will discuss in more detail in the later part of this webinar. But at a very high level, we further expanded scale in this issue, record issuance size of around 1.3 billion US dollar, with subscriptions exceeding 16 billion, making it the largest digital bond at the time of issuance. And it's also the first digital bond to integrate tokenized central bank money in the form of ECMY dollar. Additionally, we extended the tenor to up to 5 years, addressing investor demand for long-term digital bonds. And in terms of credit ratings, all three of our tokenized issuances have up ratings on par with our conventional issuances from the major international credit rating agencies. And next slide. Yep. So an important factor that helped us achieve issuance sizes that are comparable to conventional bonds is the innovative investor access model introduced since our second issuance. So in our first issuance, investors could only access the bonds by directly onboarding to the digital platform or through custodians who are direct participants to the digital platform, as shown by options 1 and 2 on the slide. However, as the market was still, since at the time, some market participants remained hesitant to adopt the new issuance formats through the digital platform. And as a result, while the first issuance have reached very important milestones and established solid foundation for further breakthroughs, the investor pool was relatively small at the time. And to address this, we introduced a new investor access model in our second and third issuances. By connecting the digital platform with our low central securities depository, the CMU, we allowed investors to access our tokenized bonds through the conventional infrastructure of CMU, as well as external linkages with Euroclear and Clearstream, where on the slide. Although investors may still need additional due diligence and potentially internal approvals depending on the applicable investment policies and regulations. From an operational perspective, going for option 3 means that the investor do not have to directly onboard or interact with the digital platform, allowing operations to remain largely business as usual. And this has effectively broadened our investor reach in our subsequent issuances. And please turn to the next slide. Yep. So to wrap up on our bond tokenization journey, while our issuances, the model of our issuances may not be directly replicable in all markets, we hope that our issuance, our experience can shed some light on the considerations for issuing and investing in tokenized bonds and create demonstrative effect to the market. And in this regard, we have seen some progress so far. In particular, we're glad to see that various corporate issuers from Asia and the Middle East have successfully issued tokenized bonds in Hong Kong with reference to our issuances. So to continue to scale the market, we are promoting adoption through various measures, such as issuing tokenized government bonds regularly and exploring ways to improve interoperability across infrastructures, as well as incentivizing more issuances through our digital bond grant scheme, which supports issuances by issuers around the world with grants up to 2.5 million Hong Kong dollars for each issuance. And we also share some reference materials with the market through our Evergreen Hub, a digital bond knowledge repository on the HKMA's website. Yeah, so that's the overview of our bond tokenization journey. And I'll now hand over to Gabriel for the second part of today's webinar.
Great, thank you for this excellent overview. We'll now discuss in a bit more detail the issuance, the motivations behind DLT and using the bond data taxonomy and the broader vision. So as a starting point, I would like to ask you, looking at HKMA's role and HKMA having been a trailblazer when it comes to issuing tokenized green and digital bonds at scale, could you tell us more about Hong Kong's vision and strategy from market development and innovation perspective?
Thanks, Gabriel. I think first of all, I think the Hong Kong government's overall, policy statement has set out, a overarching aim, its policy statement on development of digital assets in Hong Kong, where the aim is to establish Hong Kong as a global hub for digital assets, which is, a trusted market where innovation flourishes in a risk managed manner, delivering concrete benefits to the real economy and financial markets. And based on building on that statement, at the HKMA, we see that there's significant potential in the use of innovative technologies in improving efficiency, reducing costs, enhancing transparency, and promoting investor participation in the capital markets more specifically. So in particular, we also see that tokenization as an important element that would contribute to our financial infrastructure development in Hong Kong. And we are working on different aspects to it. For example, some may be aware of the HKMA's Project Ensemble, which is seeking to build financial market infrastructure that facilitates interbank settlement of tokenized money. And the project has now moved on to a new phase to support real value transactions in tokenized deposits and digital assets. But our team at the Market Development Division of the HKMA focuses more specifically on the application of tokenization in bond markets, where we see the potential of this technology in helping enhance the efficiency and transparency of an otherwise sometimes quite burdensome and paper-based process. And so far, we've been able to issue 3 real money transactions since 2023. I think Jade has mentioned that earlier in her presentation. And we've made good progress also in terms of promoting wider adoption of this technology by other corporate issuers, which have seen our issuances and modeled their issuances after us as well. And so in terms of, our overall strategy is going forward, we'll continue to make use of our government issuances to explore new features and push boundaries in this bond issuance work in order to realize some of the more of the potential of applying this technology in the bond issuance process, and as well as not just the primary issuance but also in terms of secondary market issuances to realize the potential that we see in tokenization.
Okay, that sounds fascinating. And HKMA was the first SSA issuer to adopt the Bond Data Taxonomy, both for a digital bond and a green bond. How do you see the role of standards in the market, and what were the considerations for adopting the Bond Data Taxonomy?
Right, thanks. In my view, I think there are 2 roles that standards can play in an ecosystem. One is in terms of promoting wider adoption. That is by providing a good reference for people to follow, so that it makes adoption easier if there's some standards to go to benchmark against. And second, it's about laying foundation for realizing some of the interoperability and connectivity across different digital platforms and infrastructures. By establishing common frameworks which can enable systems to communicate with each other effectively. And in turn, I think this can help reduce the risk of over-fragmentation in markets. So noting that, these 2 potential benefits from having standards and believing in the importance of adoption, wider adoption and interoperability for a healthy development of an ecosystem, we adopted the BDT in our tokenized bond issuance. Because, BDT being a standardized and machine-readable language of key bond terms and information, we think that by adopting the BDT, we can help promote interoperability and also foster more end-to-end automation in tokenized bond transactions, especially as more and more market participants adopt the same standard over time. And also just to add, besides the tokenization and digital aspect of things, I think the adoption of a more common taxonomy in general of key bond terms will also help facilitate a smoother transition, as well as a connection between the existing conventional and traditional processes to a more digital setting. So these are the main drivers and considerations which prompt us to adopt the BDT in our 2 tokenized bond issuances. And let me also invite my colleague Jadis to also elaborate a bit more on the specific experience that we had in adopting the BDT and the process that we went through in our digital bond issuance.
Sure, thanks, Georgina. So, in terms of our implementation experience, we worked closely with the ICMA and our digital platform provider to align the platform data fields with the bond data taxonomy. And so, during our digital bond issuance process, a bond shell was created on the platform, which essentially contains some fundamental security information such as issue dates, ISIN, and listing venue. And for different digital platforms, the naming conventions of the bond shell or the data fields might be different. And this inconsistency may kind of add friction to the information exchange during the potential cross-platform transactions, because these differences could potentially prevent straight-through processing and require some kind of additional reconciliation efforts. As such, in our issuance, we have aligned the platform data fields with the taxonomy. For example, issuer was amended as issuer name, and issue price percentage was changed to issue price. And the alignment is actually a collaborative two-way process, because the platform also proposed certain changes to be considered for addition to the BDT in order to address market needs and adapt to the latest industry developments. And thanks to the joint efforts of the parties, we were able to significantly increase alignment with BDT in our third issuance, with 75% of the fields being fully aligned with the BDT. And for the remaining fields, majority of them involve some minor differences, and subject to further discussions and analysis with the ICMA, we expect that the alignment of our issuances could become further aligned in future. And more importantly, the significance of aligning our issuances with the BDT is that the implementation is at platform level. And this means future issuances by other issuers on the same platform will also align with the BDT. And this could help to promote standardization and interoperability of the broader tokenized bond market. And we really look forward to continuing our collaboration with the ICMA to further enhance our alignment with the BDT. And turning back to you, Gabriel and Emma, it would be interesting for the audience to also hear from your perspectives, what are the benefits of adopting BDT and what are the latest tips in terms of BDT adoption?
Thank you, Jadis. I think you've really hit the nail on the head there with the points that both you and Georgina have raised already when it comes to the BDT. I just maybe reiterate some of the core aspects that we see as benefits when it comes to adoption of the BDT. And it really is the idea that a standardized taxonomy can provide a foundation for the adoption of new technologies and bridge that gap as well between the traditional finance and the new technologies that are impacting the market today, such as DLT. And that's why within the Bond Data Taxonomy now, we also have fields that relate to the DLT issuance process as well. And within that, it makes the market more adaptable on the whole. It makes a more interoperable and collaborative market. It introduces ease for new players integrating into the market, but also as the market changes going forwards as well. So really, the BDT is built by the market for the market. And you touched on that as well, Jadis, when you were saying about how your digital platform provider now has contributed back into the BDT as well. And on the ICMA side, whenever we work with parties on issuances like this, we always take on board information that comes both ways, and we look to improve the BDT consistently. But we'll come on to more of that later as well. One thing I think might be worth doing now also is just to highlight some of the more foundational information of ICMA's BDT for those of you where this could be your first time hearing about it. But as you've heard already, it provides that common language to represent key bond information. And that's through the whole process from issuance through to distribution as well. And we work with all stakeholders across that life cycle to make sure that we have the most accurate set of data in line with market need at the moment. And as we've touched on, some of the core objectives relate to reducing fragmentation, improving efficiency and standardization, looking at straight-through processing, and also laying that common foundation for the adoption of new technologies, making the market more agile and improving general workflows for all. So maybe if we go on to the next slide, thank you, Gabriel. As you can see here, this is just an example of the actual sort of data elements contained within the BDT. It's important to note that the BDT actually is this XML format. It's that sending and receiving of bond market information from different providers. So it is not just the layout of key fields as well. It goes beyond that in terms of the machine readable communication too. And this is just an example. If you want to find more information on the BDT, if we go on to the next slide, please, Gabriel, you can find this on our website, on the BDT ICMA website page. There's many different resources available on the website page, from our user guide, which is a great place to get started if you're looking at what the BDT could do for you. We also have a video tutorial on how to get started with using the BDT. We have example files of the BDT in practice, and we can also provide more of those if you get in touch with us directly. And we also have a Excel sheet which sort of provides an overview of the BDT without going into the detail of those XML files. One thing also to note as well is that the BDT is also available in other formats such as JSON, which is really part of our broader initiative to make it accessible to as many different people, platforms, and institutions as possible. So just to reiterate on my side then, that the core functions are really to enable interoperability in the market, to help the market adapt for new technologies such as DLT, to embrace things like DLT going forward, and to encourage that end-to-end automation of the entire workflow. I think that provides a good starting point, but if anyone does have any further requests on getting started with the BDT specifically, I would encourage you to reach out to the ICMA team. As Jadis and Georgina highlighted, we've worked very closely with them over the past couple of years, and we are always there for help if anyone's looking to get started too. But with that being said, I think, Gabriel, if you want to touch on some of the other collaborations that we've been working on and BDT adoption announcements recently, it's a good place to highlight those.
Yes, indeed. And there have been a number of important developments in the last few months when it comes to the adoption of the bond data taxonomy, both for digital bonds on the one side, but also for traditional debt instruments on the other. So in August last year, to give you one concrete example, the World Bank Treasury implemented the bond data taxonomy in two AI projects called Astra and Shastra, which are designed for issuers and investors and to leverage the latest technological advancements in AI in conjunction with the BDT. So the aim here being to streamline operations, prevent settlement fails, and enhance liquidity management. To give a bit more background on this, Shastra stands for Shaping Capital Markets by enabling a single source of truth for all. And this tool uses generative AI to extract key trade terms directly from the dealer term sheets for funding and asset liability management transactions. The objective being to reduce manual entry errors and fragmentation and create a single trusted source of validated trade data, which uses the BDT as a common denominator. And over time, this golden copy of data can be shared with downstream capital markets participants, improving the data consistency and the operational efficiency across the entire trade life cycle. And this project here built on Astra, which stands for AI for Securities Terms Reconciliation and Analysis, which uses AI to extract and analyze fixed income securities data directly from issuer source documents, and then reconciles it against data imported from third-party providers. And again, the improved data accuracy here enables more efficient deployment of cash and ultimately enhancing investment returns. We did a joint webinar with the World Bank Treasury in November last year, which can also be found on ICMA's website. Then in September last year, Euroclear and Clearstream issued a joint statement announcing their intention to digitize the Eurobond market in alignment with the BDT. There's different aspects in this announcement. One is the issuance of Eurobonds in dematerialized form, eliminating the need for paper certificates and enabling automation and the adoption of new technologies across the entire Eurobond lifecycle. And the other is about data standards and the ICSD's efforts to reduce fragmentation in alignment with the Bond Data Taxonomy. Also in September, the European Central Bank's AMISECO, the advisory group on market infrastructures for securities and collateral, published a report on remaining barriers to integration in securities post-trade services. So the wider context here is integration of EU capital markets. The report includes a number of recommendations to resolve the barriers identified. The barriers are categorized into different areas here, and there's recommendations in particular to address transversal issues, but also to enhance or address barriers in the issuer-to-investor relationship. And one recommendation here is for stakeholders, and this includes issuers, issuer agents, syndicate members, primary dealers, CSDs and custodians, so in the entire value chain, to adopt existing market standards, such as the Bond Data Taxonomy as a common language. Then in parallel, we have also been working with SWIFT since early 2025 to integrate the BDT into ISO 20022. And the primary objective is to expand coverage of ISO 20022 in primary markets, as well as throughout the life cycle. And incorporating the BDT into ISO 20022 helps expand the scope of ISO messages between relevant parties to a transaction, so between issuers, agents, or banks, investors, and service providers. And the intention here is to create and provide a standardized message format throughout the entire process. So whether it's through from origination to announcements or book building and allocations, pricing and settlement, and across the life cycle. So when we now look at tokenization, there are equally important developments here. So we've touched already on the third digital green bond issuance by Hong Kong last year. And as highlighted, the BDT was implemented the first time in the previous issuance in 2024, which marked the first issuance at the time. The first issuance by an SSA issuer, but also for a green and a digital bond. There are also other market stakeholders and banks, such as Société Générale Forge, who integrated the BDT into their digital assets framework, and it is also the centerpiece of the Guardian fixed income framework. Recently, the Z Bank also published a smart bond contract white paper in 2025, which essentially seeks to provide a framework for DLT-based issuance of debt securities and the end-to-end life cycle in conjunction with the BDT. And the approach here is to use the Bond Data Taxonomy as a basis with a functional protocol. So essentially creating smart contracts to be able to automate many of the lifecycle events which to date require manual intervention. And this is for different types of issuances. And then last but not least, SWIFT presented at the latest Cybos conference in September last year a digital asset standards platform, POC. And this is designed for the creation of tokenized securities based on the Bond Data Taxonomy in ISO 20022 format, following a modular approach to enable the deployment of tokenized assets across multiple DLT or blockchain networks. So these are some of the key highlights when you look back at the last few months. There are additionally a number of implementations that are underway, and more will be announced in due course.
Thanks, Gabriel. And maybe just to follow on from that, then, something that we can take away from this is that there's been a real push, both on the regulatory side and from the market side, towards standardization, digitalization, and modernization of the market as well. And I wonder for Georgina and Jadis whether you have seen that reflected in the differences between your previous issuance and the most recent issuance of your digital green bond. And also maybe you could expand slightly on those core differences between the two issuances for the audience.
Thanks, Emma. I think, the increasing move towards standardization, I think it's something that we should continue to work on, and I think as demonstrated in our third issuance by adopting more of the BDT, we are definitely, this is something that we will continue to strive towards as we continue to issue more digital bonds going forward. And, in terms of some of the aspects that we'll touch on later in terms of future work, how we can, through more regular issuances, provide a sort of regular and sort of standardized, issuance for the markets, as well as try and explore new breakthroughs. I think that's something that we can touch on later in terms of our future plans. But in terms of, going back to our third issuance and the difference that we've noticed in comparison to our second issuance, maybe I can build on, Jadis mentioned some of the key features of the issuance, the third issuance already, but maybe I can build on that and talk a bit about some of the observations we had from the market responses to our third issuance. I think the first thing that we noticed that was different in the third issuance is in terms of market acceptance. I think with the third issuance, I think for the second issuance, we already seen a increase in scale and acceptance. But with the third issuance, we really did see that point come out more. And there are two aspects to it. First, in terms of participation. So as Jade has mentioned earlier, we have achieved a record size of $1 billion in terms of the issuance size, but the order book actually exceeded $16 billion. I think this shows that there's, in terms of investors, there's already a increased acceptance in terms of the digital format of a bond. And in our issuance, not only did we see the financial institutions coming in, but we also saw some other non-financial institutions coming in as well. And we really did see a broad spectrum of global institutional investors in our third issuance. And it actually includes a substantial amount of investors that were actually investing in digital bonds for the first time. So, and then second point about participation is that, in terms of the arranging banks and also the direct participants to the digital assets platform, we've also seen an increase in our third issuance compared to the second and the first issuance. I think this is also a positive sign, suggesting that, market participants are more willing to devote their resources to, for example, onboard or, support a digital format of a bond issuance. And another indication of increased market acceptance that we observed from our third issuance is in terms of tenor. So if you recall, in the first and second issuances, the issuance tenor was 1 year and 2 year respectively. I think at the time of the issuance, we wanted to keep the tenor relatively shorter than some of our other issuances, mainly because market was still quite nascent at the time, and then there might be investors kind of wondering, what's going to happen in a few years' time and things like that. But in our third issuance, we actually extended the tenor of one of our tranches to 5 years and that was actually met with good investment demand as well. I think this aspect of our third issuance really shows that, investors are becoming more familiar with the digital format and also have building a better, overall better understanding of the associated risks and how these risks could be addressed. So I think these are all positive signs of our market acceptance that have been shown in our third issuance that wasn't as apparent in our previous issuances. And another point that, another difference between the third and second issuance is in our third issuance, we have taken one step further, having already sort of built this sort of scale that we wanted to see. We wanted to explore, really start exploring the sort of the interoperability and connectivity issues and potential solutions, between different digital infrastructures. And by that, I mean, for this time, we explored the connection between digital money settlement and the tokenized bond. So in our third issuance, we actually introduced the use of tokenized central bank money in the form of ICMA and Hong Kong dollar as a new settlement option alongside traditional settlement methods for primary issuance of the RMB and Hong Kong dollar tranches of our third issuance. The integration helped, further reduce settlement time and cost and also counterparty credit risk. We think it was generally, a good starting point, by using central bank money. And it also kind of paved way for potential further integration with other forms of digital money as appropriate going forward. So, overall, as we continue to on our bond tokenization journey and with future issuances, we will want to continue to explore, different aspects of, connectivity with other systems, and also, in general, we see that, more seamless integration of, digital money and tokenized bond is also a very important area, an aspect for realizing the efficiency benefits of tokenization more fully by bringing both the cash and asset components of transactions on chain.
Indeed, this is all very interesting, and to see kind of the differences in the progress made between the previous issuance and this one, and the ability, as you alluded to also be able to settle in digital or tokenized central bank money and have kind of a longer tenor and broad participation. Now, we've touched on some of the key features and the digital aspects of the issuance, but from a sustainable finance perspective, since this is a digital, also a green bond, what are the key features in this latest offering?
Sure. Maybe it is good to, often people focus just on the tokenized aspects of our digital bond, but maybe we can take the opportunity to also introduce or share, the overall kind of the green aspect of the bond. And with that, maybe I can pass to Jadis to quickly go through, the actual, the green bond framework that the Hong Kong government issuances are based on.
Yep, sure. Thanks, Regina. So for the government green bonds that we have issued so far, including all three of our tokenized bond issuances, the funds raised will actually be used to either finance or refinance eligible projects under the Hong Kong SAR government's green bond framework. And the green bond framework is also aligned with the green bond principles of the ICMA, and this alignment has been endorsed by an international external reviewer. This framework actually reflects the Hong Kong SAR government's latest climate commons and strategy, which has set out 9 categories of eligible projects, including, for example, water and wastewater management, green buildings and climate change adaptation, etc. And so in our recent tokenized issuance, part of the funds, the proceeds of the fund will be used to fund flood prevention facilities. And this project involves constructing some flood walls and improving existing drainage systems in order to uplift the drainage capacity and alleviate the risk of flooding. And this is under the project category climate change adaptation under our green bond framework. And the use of our proceeds will be published in a green bond on the Hong Kong government's website. And the information would also be available on the digital assets platform for our second and third tokenized green bonds. So I'll pass to Georgina would you like to elaborate on the green elements of our tokenized issuance and the proof of concept project?
Sure. Maybe. Maybe just to add on what Jadis mentioned, I think the overall the Hong Kong SAR government's green bond framework and the reporting that we've been doing have been quite well received by investors so far. Who are interested in how we use our proceeds, and the integration of these disclosures into our digital bond issuances have helped, enhance the accessibility of these information to the investors by putting the relevant information on the digital platform so that it's more easy to access. And so, besides, the government bond issuance and how we integrate the disclosures onto the digital bond, from a more broader, market development perspective, we've actually also explored, how technology can potentially generate additional benefits besides the sort of the disclosures and transparency that we mentioned earlier. How this can generate additional benefits in terms of facilitating, investor participation in green financing activities and getting more, real-time information, and then do more close, like close impact tracking, in using technology and integrating that in the bond issuance. So this kind of broader kind of project was done, through a proof of concept study, where we conducted together, which was conducted together with the BIS Innovation Hub. And in that study, we actually explored like broader concepts, for example, using, technology solutions to, track real-time environmental impacts of a green bond's underlying projects. So this would involve, like, say, installing, sensors to capture the impact of some underlying project, for instance, like a green building or a renewable energy facility, for example, and to track, for example, the green the amount of clean energy generated, or in terms of emissions, how much we reduce emissions by having a green building instead of a regular building. These things, in theory, this data could be transmitted or displayed to investors through even through a mobile app or something, to allow them to more closely monitor the actual environmental impact and performance of their investments. So these are some of the concepts that we explored from a more broader, beyond the government bonds issuance, in a more broad market development perspective. And obviously, to bring these concepts into real transactions, we would still need to sort out some, the more practical aspects, in terms of identifying the appropriate projects that could be enable the sort of tracking that we're talking about using sensors. But we do hope to see that through these concept studies, we can encourage the broader market to also consider potential, as they think about their way forward, what they can do, make better use of the technology to enhance transparency and attract more investors' interest in their kind of green bond issuances. So maybe I can turn the question back to you, to Gabriel. How do you see the nexus between sustainable finance and digitalization in general?
Sure, and it is a fascinating question indeed, because for ICMA, both sustainable finance as well as fintech and digitalization are cross-cutting themes. And we launched a task force back in 2024 to further explore the intersection of these two areas. So a task force with a broad range of market stakeholders across the value chain. And we had 2 workshops to further delve into this question. And the overarching question here was, how can digitalization support the drive towards sustainable finance? And you alluded already to some of the prototypes that you built and your experiences in terms of better connectivity insights into how the funds were used of a green bond. And this was precisely the topic of one workshop focused on green bonds, tokenization, reporting. And we looked in particular at, I guess, the transaction you alluded to in Hong Kong, but also other digital green bond issuances in Japan, but also in Singapore. Some of those transactions were digital bonds, while in others, DLT networks were used to store and distribute ESG-related data. So traditional issuances where the data was then put on a blockchain to provide access to investors and other market stakeholders. And the clear benefit that emerged, or as a common theme, was the ability to track the use of proceeds, measure its impact, or at least its preliminary impact, and provide insights to investors in a digital and more timely manner, ranging from real-time to periodic updates, such as every quarter. But I think it's fair to say that it's still early stages, and while the spectrum of activities is broad, if you look at the green bond principles, the social bond principles, sustainability bonds, or sustainability-linked bonds, in addition to the climate transition bond guidelines released recently, there is huge potential for technology to improve data management and access, unlock insights, and change how firms and financial institutions interact with and make use of ESG data. For example, to enhance price discovery and enhance investment decisions. Then the other topic that we explored in the second workshop was about AI and large language models for sustainable bonds and ESG scoring. And here we looked at different use cases. On the one hand, leveraging generative AI to assess ESG credentials of counterparties, but also using AI for ESG scoring. So aggregating vast amounts of data, structured, unstructured data, and understanding how this can be used for ESG scoring and wider ESG data analytics. And one of the takeaways here was that there is already sort of a widespread use of large language models for ESG data, unsurprisingly, since to some extent AI has been used for quite some time in this domain. Gen AI is the latest evolution. So it is already being used, and there's some significant efficiency gains clearly to automate manual tasks, to facilitate data aggregation at scale, to produce analysis. But there are also risks that need to be managed, whether it's hallucinations, producing different outputs based on the same inputs, and data quality. But this is an important topic which ICMA's task force continues to explore, and more will follow here.
This is potentially a good time then, as you say, Gabriel, where more will follow, to look towards the future based on everything that we've discussed so far today. And maybe, Georgina, you can touch on the next steps. I know earlier you spoke a little bit about the broader plan for the HKMA going forward, but whether there are any sort of concrete action points on the horizon for the HKMA following this issuance.
Thanks, Emma. I think there are we are proceeding, continuing with our bond tokenization journey, through, four main aspects, right? First is, I mentioned earlier, we will continue to be assisting the government in issuing digital bonds regularly. So to do two things, right? First, to provide a stable supply of high quality tokenized bonds for investors, as well as, continuing to set benchmarks for prospective issuers and references for them to draw from. But at the same time, also through the issuances and the engagement with market participants, we will also look to test out new features and explore further potential benefits that can be generated from the adoption of technology through these issuances. And secondly is the continuing to tackle this broader issue of interoperability. And here, I think it's across digital infrastructures, which we mentioned earlier. In terms of digital money with the bond issuance platforms and other aspects as well. Between digital bond platforms, interoperability on this kind of digital aspect. But at the same time, also looking back at the traditional and digital, how these two these two processes and infrastructures will continue to interact, because I think it will take time. We're currently in a phase where these two conventional issuance and digital bond issuance coexist, and how do we kind of manage the connectivity? I mean, with our two previous issuances, we've adopted this issuance mechanism where we linked the digital platform with our traditional CSDs to enable different options for investors to access the bond. What else do we need to do, or what else can we do to further ensure there's a smooth kind of connection and transition in the market. And also, thirdly, we're also looking at Hong Kong's own legal regime, right? From our first to third issuance, we've already demonstrated that Hong Kong's regulatory and legal environment is already flexible enough to allow and support these sorts of digital bond issuances. But whether we have started a legal review to actually see whether there are additional aspects of the current legal framework where we can enhance. To sort of update the, or clarify some of the aspects to enable a more, automated process of the digital bond issuance. For example, are there, areas of the law which, still require, paper-based, documentation, or wet ink signatures, or how do we define possession? These kinds of aspects. Whether we can further enhance the current or clarify some of the current legal requirements, so that we can further support a more sort of fully digital process when we issue a bond, or facilitate bond transactions. And also finally, I think we will, another direction that we're moving. It's, I think the overarching theme is to promote wider adoption. So how do we encourage, other issuers to also explore, the potential benefits of adopting technology in their own bond issuances. So, I mentioned, setting, trying to lead by example and set, references for others. But at the same time, we are offering, a grant scheme where we provide, some, monetary support for in terms of, issuance costs for those, digital bond issuers. Eligible issuances through our digital bond grant scheme, and also further, sharing our experience and information. We have a dedicated web page where we include some of our digital bond related resources, including our issuance documents. So you don't have, if you're considering issuing a digital bond, you don't have to start from scratch. You can take a look and see what sorts of disclosures that we have to do, additional risk disclosures in our documentation, what sort of BCP or what standards we adopted when we were issuing our own digital bonds. So these are the key areas that we'll be working on going forward, and collaboration with different industry stakeholders will be crucial on that front. And so especially industry associations like ICMA. So I think it would be great to know from you and Gabriel as well. What sorts of priorities does ICMA have and plans going forward? From the sort of financial innovation or digital perspective, but also more broadly in terms of your priorities in the markets.
Yes, absolutely. And looking ahead, and if you look at the broader trend in terms of digitization in international capital markets, I guess a key trend here is that primary market stakeholders, in particular issuers, continue to play a key role in driving digitalization of capital markets. And we're working closely with a range of market stakeholders, including issuers, to further drive market efficiency in that respect. When we look at tokenization in particular, we see that the proliferation of new forms of digital money, be it tokenized central bank money, regulated stablecoins, or tokenized bank liabilities, is expected to drive growth of tokenization bond markets and also other asset classes. And we also see the importance of the Bond Data Taxonomy as a common language to, on the one hand, facilitate automation and interoperability, bridging digital or DLT-based and traditional debt capital markets. Now, when it comes to our priorities, we continue to collaborate with a range of market stakeholders and regulators to advance automation market efficiency. And there's different areas that we focus on. One in particular for this year is DLT readiness of the market. So we will be holding a series of webinars. There's further outreach and education planned, building on the DLT bonds reference guide, which has been used by a range of stakeholders for participants who are either new to tokenization or those who are interested in very particular aspects. Custody is another important topic, in particular for investors of custodians, and this builds on the work done under the Guardian Fixed Income Framework and the publication of version 1.1, which was led by ICMA. We continue as well to focus on repo, tokenized collateral, and digital money, and this is something that our legal team focuses on together with the European Repo and Collateral Council and also the Global Repo and Collateral Forum. There was 2 years ago the GIMRA Digital Assets Annex that was published in 2024. We are looking at potential adjustments if needed to this. We also continue to focus on DCM processes through the Prime Market Innovation Project. So this being a kind of key focus to foster innovation in this market segment, working with different stakeholders and focusing on innovation and efficiency of the market. And then, of course, our regulatory engagement continues to support market stability and consistency with a focus here on safe and secure adoption of technologies, of innovative and transformative technologies. And there's, of course, our ongoing work on the BDT, as mentioned. There is a forthcoming release of version 2.0, which builds on many of the recent developments that we touched on in terms of adoption, some enhancements, essentially expanding its scope in particular. And there's also the ongoing integration into our ISO 20022, which is due to be completed in the near future. And this is under the overarching aim to support harmonization and interoperability. There are as well a number of resources that we thought would be worth highlighting before then looking at the questions that have been submitted.
Thanks, Gabriel. Yeah, just to highlight to the audience that on ICMA's website, we have a number of resources to support the digitalization of the industry, but also those that operate in the industry within the sort of digital aspects. So we have a set of directories which cover the key features and capabilities of various technology solutions in the industry, and that's for both primary, repo, electronic trading, and operations as well. And then we also track new DLT issuances as long as new AI adoption use cases on our website as well. And this is a great resource of the growing number of DLT transactions that we're seeing. And you can use it, it's free to all to access, and you can access it on the FinTech ICMA website. We also have a ICMA FinTech newsletter. I would encourage participants to sign up to that newsletter to stay up to date on all of the work that the ICMA FinTech team is doing. That's across our different work streams, which include AI, data standards, as well as looking more towards stable coins now, and of course, DLT too.
Great, thanks, Emma. So with that, we can now look at the Q&As. I see that there's a number of questions that have been submitted in the remaining minutes here.
Yeah, maybe I can cover some of the aspects in groups. Maybe, instead of, going through each one, one by one or specifically, maybe I can just cover a few themes. I think in terms of given the interest, the limited time that we have. In terms of settlement time, yes, we reduced the settlement time of the bond, the primary issuance from T+5 to T+1. That is also doable in the secondary trading. But I think a general observation, based on the, the digital bonds issuances in the market that we've been observing, aside from the government bond, the Hong Kong government bond, I think the settlement time has varied. I think we've seen some that have been settled by T+2 or T+3 or T+, I think that's, mainly due to the sort of issuer's preference and also, in consultation with their arrangers, sometimes, they prefer a longer settlement time. But in general, what we've seen is, there has been a reduction from the conventional, typical T+5 that we see in conventional issuances. And also maybe just to quickly touch on, in terms of the risk, I think one of the key risks that we see is probably the in terms of the platform risk, right? And in terms of the disclosure and how investors see the additional digital layer will create risk on that front. But the important thing is having the relevant BCPs in place, business continuity plans in place, and disclosing that as part of the risk disclosure. And also we've seen that it actually, in terms of our credit rating, credit rating agencies have assessed our digital bonds and rated it at this on par with our conventional issuances. I'm not sure if we have more time, but maybe I think the seminar is wrapping up, so maybe I can pass back to Gabriel to wrap things up.
Yes, indeed. So I think we are at time here. With this, I would like to thank you for your participation. Thank you very much for joining us today. A recording of the webinar and the slide deck will be made available shortly. You will receive this by email. And there is also the additional resources on the website of ICMA and also of the Hong Kong Monetary Authority on the Evergreen Hub. With that, thank you very much.
Thank you.
Thank you, everyone.
Thank you.